Well, welcome back to the show, everyone. I have got a very special episode for you today. We are going to step back into my world of investments and economics. So, for those of you who may be new here, and a quick reminder for our regular listeners, I am a registered chartered investment manager and have owned my own investment securities firm. So, this topic is right up my wheelhouse. So, a lot of you have been asking the question, you recognize there's some turbulence ahead. What can I do? So my guest today is extremely knowledgeable, and we are going to take the gloves off. We are going to dig into the economics, the market cycles. We're going to talk real estate, share some lessons from past crises, and give you some perspective on hopefully not just how to survive, but to thrive in the cycles ahead. So we're going to get right into this here, and let me introduce to you Mr. Patrick Francey, who is the CEO of the Real Estate Investment Network. Many of you know that as REIN. It is a long-standing community for real estate investing and education and research, and has been around since 1992. So Patrick has more than 40 years of real estate investor, entrepreneur, and coaching. He helps investors navigate the market cycles and build resilient portfolios. He also hosts the Everyday Millionaire podcast and co-hosts the weekly Mindset Matters with his wife, I believe, Stephanie. He shares very practical insights on both leadership, wealth, and personal growth. So through REIN's programs and analysis, its community has completed more than 37,000 transactions and represents more than $5.4 billion in Canadian real estate. Welcome, Patrick, to the show.
Oh, well, thanks, Nadine. I'm happy to be here.
Yeah, I went, been thinking about doing this for some time, and it's like, well, who do I get on here who's got that experience and 37,000 transactions? I thought, okay, that checks that box. And of course, but more importantly, the ability to articulate, I think, the markets and the economics and the crises and the things that behind the scenes that people could actually understand. And
Well, we hope we can achieve that. Yes, that's the goal.
I've heard
Always.
you speak. You're amazing. I know we can achieve that. So, without further ado, though, I want to dig right in, Patrick, because I know, the Real Estate Investment Network has been around for a long time, and you've seen lots and lots of market cycles. I want to get your perspective on kind of what you're seeing today.
Well, when it comes to real estate or just the general economy, I mean, we can take different approaches to it. First off, if we look at just the real estate world, for those of you who are looking, or maybe you're real estate investors now, or you are thinking about investing in real estate, or you're totally not thinking about it given what's going on, at the end of the day, we have to go back to a fundamental, which is that real estate is regional, it's not national. Although the headlines we read, the stats we get are often national stats, we have to kind of break that down and go, well, okay, there's no such thing as a national, although we provide averages, national averages, they're really meaningless when it comes to real estate and even to economies to a large extent, because they are very regional. What's happening in Alberta is far different than what's happening in Ontario and in British Columbia, for example, right now. And I mean, the diversity and the shift and change in the economies of each of those provinces I just named is quite diverse. It's quite wide. A lot going on that we have to pay attention to.
Yeah, and I think that's a really good point to start with, is that when you're looking at any opportunity, whether it's real estate or whether it's a stock or a bond, there's cycles for everything. Everything does have its own natural cycle. And in real estate, it is definitely very much a regional perspective that you need to take. It's good to know what's going on nationally, can create some opportunities, but at the same time, there's always little hidden gems that, and or opportunities if you know where to look. And when you've got a larger playing field, I love that 30,000 foot view of things. And you can see the entire chessboard, because sometimes when you're in the weeds, when you're on the board, it's kind of hard to see the next move. But when you're looking at it from that different perspective, you have a better kind of idea as to what your next move should be.
Well, I think there's a couple things around all of this, which is, as individuals, we're looking at what's going on economically, and we're either seeing chaos, or depending on what business you might be in, you may be seeing some opportunity. But the reality of it is that, if we're investing in anything, we have to look into the future. The challenge that we face, and I see it all of the time, which is we're reading the headlines of today, and we get caught in the emotion of it, the diversity, the polarization, the politics, the rhetoric that is going on about what they're doing wrong and they're doing right, and somebody should be doing this. And again, that divisiveness, that polarity, it's very emotional. And we're caught in what's here. And do we have the ability to step back? Can we control and kind of get a handle on the emotion of it and take the emotion out and say, okay, let me just see the data. Let me look at what's really going on here and look into the future. Because whether you're investing in real estate or the stock market, it doesn't matter. Whatever you're investing in, our job is to look into the future and say, where are things going, not where are they today? So when we look at the emotion of it, it will keep us stuck. It'll keep us sitting on the sidelines. We don't know what to do. We don't know what to do. It's so bad. It's so bad. It's so bad, or whatever it might be. But if we don't look into the future and say, where's it going, then we make really tough and often the wrong decisions because they're based on emotion. So where am I going with this? The point of it all is that if we can look at the data, and there are data points. So when it comes to real estate, so we look at the Real Estate Investment Network, we've spent years doing the economic research. We understand what we call the formula, if you will, to look into the future of investing in real estate. So we look at the economic data. We know that GDP drives, of course, employment. Employment creates population growth because people move into a region where there are jobs. Of course, those people who are working are spending money in that economy. They're renting real estate. So if you're in the world of real estate, they're renting properties, and immigration is coming into that province, into that city, which is creating demand for real estate. So we can look into the future and say, okay, well, GDP growth, let's just say it's good, which is not right now, but let's just say GDP growth is quite strong. So we know that we're going to see population growth. We're going to see people moving into that city, into that province, whatever it might be, which is going to create rental demand. So if you're a real estate investor, you're going, okay, I want to be a rental housing provider. And if I'm going to be in the business and treating my real estate investing like a business, I want to know that I've got clients that are coming, and I'm going to have tenants stepping up saying, I want to rent your property. So I'm going to be that rental housing provider because I see the future, the economic future of a city. So let's just break it down one layer further, Nadine, and say, okay, what's happening, for example, we'll use Calgary, Edmonton, anywhere in Alberta right now, Saskatchewan, we see those economies are still staying relatively strong, not strong, but relatively strong. Where you look at what's happening in Ontario, those economies are that economy is getting really hit hard. You get into specifics around Toronto, the GTA, Hamilton, for example, and you start to understand that each of those economies, if you look at the data, you're seeing GDP is like zero or arguably below zero, like we're into negative territory. Those are always debatable and arguable right now, versus what's happening in Alberta. Although the economy in Alberta is softening, we're starting to see signs of softening. It's still relatively strong compared to, let's say, what's happening in Ontario. So as investors, we're looking at whatever region that we're interested in, and then we can make decisions based on that data, looking into the future.
I think it's important to note here too, because you're using terms like GDP, so gross domestic product. This is something that basically the big banks and the central banks are always kind of monitoring as far as countries, national level things go, because that's influenced their ability to borrow and their credit rating. And so one of the other, I think, metrics for a lot of people to notice if they want to know whether their standard of living is increasing or not is GDP per capita. So in Canada, we have one of the worst GDPs right now of all. I think the OECD measures 38 different countries, and Canada's at the bottom with point.
100%. Yeah.
Yeah, 0.5%, I think. And that's not only, for the last 10 years, because people want to go, oh, that was Trudeau. Well, no. Yeah, Trudeau definitely in the anti, productivity policies that we have, because productivity is how you get out of that scenario. But
Mhm.
with that in mind too, it's important to note because you know, policy does impact the economy. It does impact the market space. But at some point, policies always shift. Governments always change. There's always things that happen. So, so many people today are just burdened by fear that they become paralyzed to take any action. Like there are trillions of dollars right now sidelined. Some of that because they, I think, see opportunity coming in the future and will deploy that cash then. So they're setting aside some reserves. And then more of that, I think, is just people who just, I don't know what to do. So where
Mhm.
are we at in today's kind of big global market space?
Oh boy, when you look at what's happening globally, when we look at macro, it's not looking good. It doesn't matter where you go. Now, there's no good news really on a global level. We've got certainly a
Sorry, I brought
breakdown.
that up.
Yeah, exactly. There's just no good news around it. When we look at what's happening, whether it be Ukraine, Russia, Middle East, China, the breakdown right now, for example, in monetary policies, when we look at what's happening with the U.S. dollar, the Canadian dollar, with fiat currencies anywhere, we're starting to see a detachment. I mean, right now, for the first time, what is the stat? I actually just saw. I posted a chart, and I'm trying to remember in my mind where gold is outweighing treasury. So in other words, money flowing into gold is more than treasuries. First time ever that it's crossed that, which means that when we look at what's happening globally, the loss of confidence in the US dollar as the reserve currency, these are big shifts that are happening. There's no doubt about it. So what do we do? For me personally, I look at where do I invest my capital? I've been investing in precious metals for many years, Bitcoin for many years, like alternative stuff aside from my real estate portfolio. For me, I always go back to my businesses. I'm investing in my businesses. And so, we have to look at the bigger picture, and it certainly is a confusing picture. But I would encourage anybody, and this is how I look at it, we have to look at what's going on at global macro. How is it going to impact us? What is happening with us politically these days, which is, I mean, let's face it, that's a mess. So, what do we do? And ultimately, we know that there's some fundamentals, which we're seeing inflation. If you believe inflation's going to continue, which I think most people realize that's going to continue, we have to get our capital to work. So, where do we put capital and how do we actually put it to work in a time of so much chaos and uncertainty? And it's actually in the chaos, Nadine, that we have to step back and go, where is the opportunity in the chaos? We have to look for that opportunity, and we may have to pivot. You as an entrepreneur and doing what you've done over the years, or myself as an entrepreneur for over 40 years, we learn how to pivot. We actually look at the chaos and say, this sucks. It was way easier before. This is now getting harder. It's stickier. The politics are making me crazy. So where are the opportunities in the chaos? And we have to look for that because they do exist. It just takes a little bit more work. The analogy I've used in the past, or the metaphor, I guess, is really if you're digging for gold, if you want to get rich digging for gold or diamonds, ultimately you have to blow stuff up. You have to dig. You have to work. You're not just walking down the beach picking up chunks of gold or diamonds. You have to blow things up. You have to dig. You have to be very intentional. And that's kind of where we are in this economy right now because there is so much rhetoric out there. The divisiveness and the polarity politically and within our society is just, it's greater than it's ever been. And I think everybody's feeling it. Our goal here and our own kind of way of being is to step back from the emotion of it, not buy into it. And I often go back. I've studied stoicism for many years, so I always, one of my grounding mantras for myself right now is, Marcus Aurelius: what can I control? What can't I control? And we control very, very little. The only thing we can control is our response, our response ability, our ability to respond to certain situations. So for us, as entrepreneurs, as business people, as individuals are trying to elevate and say, okay, how do I lean into this? We have to step back and go, okay, I can only control my response to certain things, not the emotion of it, and not make emotional decisions. So that's the first guidance in this mess that we're dealing with. I don't know if that really answered your question. I kind of went off on a tangent, but anyways.
Well, no, it's a really good place to start because as an investor, we should be removing the emotion out of the equation as much as possible because the emotions often confuse the ability to think clearly. So, and we call that market sentiment. So, I mean, I'm always following what the market thinks and feels. And right now, the market sentiment is typically leaning more towards the fear side. And, to quote Warren Buffett, you buy when there's blood in the streets, but it's like you sell when everybody's greedy, you buy when everybody's fearful. Right. So it's a bit of that contrarian kind of thinking, but that's what happens when you can park the fear, the emotion, and actually engage in looking at where the opportunity lies. And when then you understand the key market fundamentals. So that's another way that you can analyze the market is through the fundamentals. And when I look at businesses, I look at the long term. I look at the market on a global, on a regional perspective, and then I look at the opportunity as it exists to what I predict the future market is going to hold. As you mentioned, inflation. Interest rates is another one. Are we going to see another interest rate reduction this year, or are they going to hold, or are they going to go up? And for me, it's always patterns. I like to look at trajectory patterns. Which direction are we going? And that I think can help a lot of people sort of interpret where to kind of position themselves and what they should be looking at doing. So, and then you also have technical analysis, which you do a tremendous amount of fundamental and technical analysis in providing the data, like the actual data. What are those population growth numbers? What are the unemployment numbers? How many people are moving into a region? How many people are leaving, out migration? The demographics around that. We are going to see, I believe, one of the greatest transfers of wealth because we have this little group, just a little group called the baby boomers. You
Mm-hmm.
might have heard of them. And they have ruled the economy for a very long time. Like if they sneezed, everybody else caught a cold because they are such a large consumer, and have just driven the economy. So, but now they're all retiring or they're transferring their assets or selling their assets. So let's talk a little bit about the baby boom generation and what you see the impact of that is on maybe real estate.
Well, no, as a boomer myself, so I turned 67 this year, and so I'm looking
No,
at my
no,
life.
no, 57, 47, somewhere in between
Yeah,
there. You look far too good to be 67.
okay, well, I work at it. So, good lotions and anti-wrinkle creams. So the point of it around all of what you just shared, let's break down a couple of things. When we look at what's happening in Canada right now, certainly the political diversity or the divisiveness is huge. I mean, what's going on, and that's going to continue, I think, for the foreseeable future. We're just not getting it together. When we look at Canada's productivity, Carolyn Rogers with the Bank of Canada, she said it really well. In case of emergency, break glass, and it's time to break the glass. We're just not being productive. So let's go back a little bit, and I will get to the boomer question or comment in just a second, but I want to kind of lay a foundation of something that we have to really be aware of. So first and foremost, Canada is just not productive. So for this past 20 years, 15 years, 20 years probably for sure. We go through the great financial crisis because of the US and all that happened in 2008, 2009. So that is one part of it. But we're just not productive. Back to your consumer confidence or sentiment, however you want to look at it, consumer confidence is very low. Why is that a problem? What has been driving Canada's economy in a big way for the past 20 years, we'll say, is real estate and consumerism. Consumerism driven, and especially the past 5 years, driven through immigration. So it looked like our economy was chugging away. We're doing really well. Things are really awesome. But you take out real estate and you take out immigration, and what happens to our economy? We don't really have a lot to hang our hat on. And given the political climate and its propensity to be about net zero or climate change or whatever it is, what are we doing? We're not exporting a lot of the commodities that we have, so that becomes an issue. And so we have this economy that's really getting and continuing to be soft. So what does that mean? You've got boomers who are sitting, getting ready. Number one, they're opting out now as opposed to staying on. So when we look at the experience in our workforce, we're losing a lot of experience. So that's the first part. That's not a good sign. A lot of boomers are going, either I'm done, and or they're concerned because, do I have enough? Gosh, at the rate of inflation, what am I going to do? How am I going to be able to support myself if I live to 90 or 100? Because let's face it, we're all living longer given our health system. And I don't want to call it healthcare system because people really complain, but we're far more knowledgeable today about how to look after ourselves. So we're living longer. So I think boomers are starting to realize, number one, they don't have to retire. Others are going, I can't retire. And so they have kids that, as we know, can't afford to get into the dream home, the white picket fence and what it is. So what's happening is boomers are then starting to early, I guess, they're breaking up their wills early. In other words, they're saying, well, I'm not going to wait till I die. I'm going to give you the money now, get you into a home. So there's a lot of that going on. The fundamental, I think, with boomers right now, though, is that how long do I have given the rate of inflation, and how do I stay ahead of that game? And then there's boomers, and I know there's so many aspects to this, Nadine. I'm kind of going on, but the other side of it is, how do I exit? How do I exit my portfolio of whatever it is? But let's use real estate as an example. And I'm seeing on a regular basis, I've had conversations with many who have significant portfolios, multi-million dollar portfolios, and they go, how do I get out of this and not pay this huge tax bill? So I don't know if that kind of gives you some context to how I see it, but I think right now the opportunity is in supporting longtime real estate investors exiting their portfolio. And we're starting to see some kind of direction for that for some individuals. Others who are just sitting there going, I don't know what to do. I don't know what I'm going to do. And my kids don't want it. So they're ultimately going to try and sell and pay the tax man.
And I'll tell you, taxes are one of the number one killers of wealth. You definitely want to have somebody on your team that understands how
You
to
must.
avoid or defer those taxes, because oftentimes, just continually deferring them, there are strategies to do that. So people are aware you don't have to just hand your hard-earned dollars back to the tax man. There are ways to do that. And real estate is an amazing asset class to be able to do that. And, for those people who do have some taxes, it's about minimizing that tax liability. You brought up a really good point, because you brought up treasury bonds. Right now, gold is surpassing treasury bonds. Just so people understand, have always been a safe haven in a downturn market. Always. People always turn to treasury bonds, usually long term, because now we are turning and looking more at the preservation of wealth. Do not lose my money strategy. As opposed to make me money. And this is one thing I want to convey to investors today, is that everything runs a cycle. There is a time to make money, and then there is a time to preserve money. And I often use an analogy of a farmer. The farmer goes out, he plows the field, he seeds it, he works it, he tends to it, he plows it, and he reaps the harvest. And then he doesn't know what to do with it, right? So he gives it to his wife, and she bottles it and makes jam on it and sells some to the neighbors, right? It's like they're two different activities. And making money and preserving money are, in my opinion, two very different activities, and they require different strategies. What are your thoughts around that?
Well, that is, it's a common term in the industry, which is, I'm not just looking for, I'm looking for a return on investment, but I'm looking for a return of my investment. That's also the other side of that coin. And certainly with what's gone on in the real estate world, especially when you look at what's happening in Ontario and British Columbia, it is I think meltdown is not blowing it up bigger than it really is. It is an absolute meltdown. And for a lot of people that's causing a lot of grief, where they're losing millions and millions of dollars. And within the industry, I mean, developers are shutting down. So it's been a big hit in that world. And so there isn't a return of investment, let alone a return on investment. I think there's another kind of point that we don't want to step over in this conversation, which is as much confusion as there is, uncertainty, the old FUD, fear, uncertainty, doubt is keeping people on the sidelines. The challenge, Nadine, as you're aware, is that, you got 100 grand in the bank or $1 million in the bank, and it's sitting there. It is just melting away like an ice cube. We look at what's happening with what we refer to as the CPI. It's we've got things handled. It's only 2.5%. Yet we know. I mean, as consumers, we know that we're going to the store and we're paying 10 and 20 and 30% more for food, for example, than we were even 3 or 4 years ago. So our cost of keeping money in the bank is really high, and we think, well, at least, I mean, the worst case scenario is that you've got to get it into some form of even a short term where you can get 3.5% or 4% perhaps on your dollars, but you're not even coming close to keeping up with inflation. And now the bank, by the way, I'm sure you're aware of this. If you haven't, it's just been recently, the bank has changed. And they're saying, well, normally we look at rates based on core inflation. And they like core inflation to be less than 3%. And they're going, as long as it's with under 3%, we're good. Well, now they've eliminated that bench or that bar, that benchmark. Now they're going, maybe it's, even if it's 3.5%, we're going to change the rules because this rule isn't working for us. So this goes back to interest rates and where we think interest rates are going to go. But where we think inflation is going to go as investors is up. We have to just realize that's what's going to happen.
Now, so you've brought up a couple of really good things there. So, I mean, this is the problem with government. They can change the rules. They make the rules, they can change the rules. And inflation, as you pointed out correctly, it is not 2.5%. It's not 3.5%. It is far beyond that. There is a group called Shadow Stats that I follow. They typically tend to provide more realistic numbers around inflation, and they're double digits. Let's be honest. I mean, that you feel it when you go to the grocery store. You feel it when you go to the gas pump. You feel it when you pick up, your kids' clothing for, get back to school. Everything is going up. And, you are looking for those inflation hedges. So that's part of the tax, in my opinion, because inflation is a hidden tax. And what people need to realize, and they don't understand, because we don't teach this anymore. We don't teach it in schools. We don't teach it in any of our institutions. People don't even understand where inflation comes from. They go, oh, well, inflation, that's when prices go up. It's like, no, that's the outcome. That's the consequence. What was the cause? And the cause started the day that the government started printing money. Printing. That day was when you knew immediately we were going to see inflation. And if you look at the debt, I think the US is $37 trillion right now. Canada, 1.2, almost $2 trillion. That's a liability. That's money that needs to be repaid at some point in the future. So inflation is their tool that benefits them at the expense of the consumer, because the consumer pays a higher price. But by inflating the cost of everything, it lowers their debt. They can repay the debt with less capital. So this is something I think it's important for people to understand. Let's jump into that a little bit, because then I want to talk about the monetary system a little bit, and how some people think that money is secure, right? And they squirrel it away in their bank account, right? And it's like, we have seen many economic crises and dollar collapses all around the world many times. So, but let's start first with some high level, and then we'll drill down a little further.
So to your point, Nadine, we have to look at monetary policy, and as investors or as individuals who are just trying to stay ahead of whatever the heck is going on in this world, it's up to us to educate ourselves around and understand, at least to some degree, monetary policy. The fact that we live in this debt-driven world, that quantitative easing is really inflationary. I mean, we talk about inflation, we haven't even touched on taxflation and just the amount of taxes that we're now paying that just slowly is creeping up on us, and the challenges that that's causing for governments. I mean, both provincial, federal, municipal. That's a slightly different conversation. But the point of it is that when we look at the speed of which things are inflating, the cost of things, our money is losing value. And so what happens is that asset prices are going to continue to rise. This goes back to the rich get richer. And why is that? Because the wealthy own hard assets, stores of value. And the quantitative easing, monetary policies, they're not going to go away anytime soon. So we have to stay ahead of that curve. So there's a fundamental here that I think we need to touch on. Wherever you are in what you're doing, there is this confusion, Nadine. And then ultimately, we have to create a thesis for ourselves. We have to look at the world and say, this is how I see the world. Then we say, okay, well, here's the scenarios. We look at possibilities, then we look at probabilities, and then we make decisions based on that. And ultimately, when we look at the possibility and the probability of things continuing to inflate and fiat currency losing value, we have to say, well, where do we put our capital? And that's always going to be in some store of value, because we know asset prices are going to inflate. I mean, we look at the price of gold and or precious metals, platinum, silver. I mean, gosh, it's crazy. But why is that? It's because it's a flight to safety. Money central banks are buying precious metals. They're buying gold by the tonnage. They're not going into treasuries. As a matter of fact, they're letting treasuries expire and they're buying gold. They're like, it's a total shift. We could see that coming 10 years ago. We definitely saw it coming 5 years ago. And you start to understand why asset prices continue to inflate, but more importantly, why we as investors need to get our capital put to work.
And that's a really good point, because you need to take a look at probable outcomes. And again, this is where the patterns, the trajectory, where are we going? If we're continuing on the same trend, or is there at some point it's going to reverse? And right now we are seeing, like you said, the central banks that are amassing gold again. And, it's really funny. During Pierre Poilievre's campaign, he did an interview. I don't know if you saw that interview. I actually have a clip, and I put it out because I used it in one of my presentations for investors. And I said, here you go. You don't think that the politicians don't know where to preserve wealth? He said it. And he said even things like collectibles, rare wine, whiskey collections. I tell my people, you may not be able to afford fancy watches, but you can afford a couple of blocks of silver. For that matter, if you had bought more medicines and more spices and more tea, 6 months ago, you would have saved 10%. And so a savings is a return, made 10% on your money today. But things that you use on a daily basis, right? So
100%.
Everybody can do this. Everybody can do this.
I think it's a fundamental, whether you want to call yourself a prepper and to what degree you go and prepare. So I'll give you an example right here. We live in Alberta, we live in British Columbia, but in Fraser Valley a couple of years ago, I've lost track of when it was, but I think it was 2 years ago, we had huge floods. Sumas just flooded. So the thing was a giant flood, dike breaks, water just wipes out a whole area. And it was just, oh gosh, it was heartbreaking to see the agriculture and the animals and all the things that was lost in that particular flood. Here's the point of it. For 3 or 4 days, it was shut down. Highways were shut down. I don't know if you remember that storm that happened in British Columbia, but we lost access to the ports. Highways were shut down, access to fuel. But here's the fundamental. So we live, in the property that we have here in British Columbia, but we had always looked at it. I know I'm going to jump around a little bit, but think about what happened in Fort McMurray, Nadine, when the fires hit, when the floods hit. Do you know that when they vacated Fort McMurray, do you know what there was two things that were really prominent in the challenges that people faced. One was they didn't have gas in their vehicles, and they didn't have water, spare water. Now, all good in the hood if you're just living your life and you don't look and say, well, what's the chances of a fire wiping out a huge part of our town? Well, nobody thinks that way. So what was happening is when they vacated, people were running out of gas on the highway. They didn't have water to get them through the times that they were sitting parked in traffic, etc. The point of it is that it was in that moment in time that my wife Stephanie and I looked at it and go, let's make some basic rules here. Number one, we always have water in our vehicles. Number two, half a tank of gas is empty for us. So we've made a commitment as a family, and when that gas tank hits half a tank, we fill up. No excuses, and we sometimes lose it because of timing and access, etc. But the point is that we always have it. Go back to the flood in Sumas. So in our kind of in Abbotsford and this community, it was shut down for 3 or 4 days. Fuel wasn't available, stores were closed. And what people don't realize is that they think, well, I'll just do a quick run up to Safeways, well, or Walmart or wherever. The point is that the minute you have that power outage, they clear all frozen goods. They clear a whole bunch of food off the shelf because they consider it spoiled right away. And so there was individuals had no gas, they didn't have enough food, and we looked at it, and because we had put some thought into this process, we were like zero effect, like nothing. We were handled. We could have been here for a month and been really, really good. The point is that when you create and when you look into the future of the possibilities and the probabilities, if we kind of follow the plot, we're starting to see more and more of these climate change things happening, whatever they might be, and whatever we think the cause might be. The reality is it's happening. But it's the same way for our money, is that when we look at what's happening on a global macro scale, if we think that we're not going to be interrupted and that inflation isn't going to be a real thing, given what's happening, and I use Russia, Ukraine, but it's Russia, Ukraine, China, North Korea, Middle East, there are going to be definitely disruptions, supply disruptions. And as soon as you have the supply disruptions, it's going to take inflation to the next level. I mean, you can get really extreme around that thought process, and many are forecasting a hyperinflation environment. The thing that what happens with this, Nadine, is that people are going, well, when's it going to happen? Like, when is hyperinflation going to happen? When is this? It's happening. We're in it. Now, we don't know how far it's going to go, but it's not a switch. It's not like we wake up the next day and go, oh, hyperinflation is here. No, that's not how it happens. You are actually in the process of it. And I think a lot of that underlying fear that people are operating on top of is they know something's wrong, something's up, but we just can't put our finger on it. And that's why the study and the watching and seeing what's happening at a global level is so important for us to make decisions about where we put our capital.
Yeah, so some really good points there. For those, people in Ontario, I'm sure they remember the ice storms, that would knock out power for a week. For me, I'm looking at that going, not a problem. Generator, there's extra gas, like you said, and there's a real difference there between urban and rural, because rural people tend to be far more prepared on that front than urban who just, they have enough groceries for tonight's meal, and for tomorrow morning's breakfast. They don't think, right, about the probability of, what do you mean I can't go to the convenience store and fill up my tank? And I love that. Half a tank is empty. And, we drive a big dually because, of course, we have lots of ranching activities and own a horse and those types of things. And, we have a big tank in addition to the tank, of always of gas, right? And then and for me, here's the thing too, like if we happen to be going down the south end of the city, we know where the cheapest gas is. So you know what, when we get to half, we go and we happen to be in that vicinity, you fill up there, right? So these are all things like, because people go, well, Nadine, I don't have a lot. I understand you don't have a lot. And I don't ever recommend somebody drive, 100 kilometers to the south end of the city to get the cheapest gas. Well, you just burnt up your savings getting there. But if you happen to have a reason to be there and you know that this gas station is always 5 cents cheaper, why not? But you brought up a really good thing on supply chains, because this is something that people don't understand either. And I'm not a prepper. I like to be prepared. And
Yeah,
that's the way I look at it, is be prepared. You should always be prepared, at least, in my opinion, for 2 weeks, preferably 30 days, because you know what happens? Your neighbor's not prepared.
100%.
Right. And then they come over and they go, we don't have any milk. We don't have any food. We don't have any, water. Water is a big one. You can survive without food for a lot longer than you can without water. And you can be uncomfortable for a little while. And that's another thing I want to talk about too, is discomfort, because people need to start shifting how they think about things. We have lived in a very comfortable time, right? Where we saw peace pretty much around the world. We didn't see major disruptions in supply chains. And right now we are going to see global disruptions in supply chains. And I think that needs to be kind of come into people's minds. This is the new normal, right? Is a little bit of this chaos. And we need to become more resilient. We need to become persistent. We need to rely more on community as well, and find those who have the knowledge, the experience, the expertise, and lean on that. Like, where do I go? What do I do? How do I get through this and come out the other end, hopefully not just surviving, but thriving? So
Mm-hmm.
let's talk about the fiat currency a little bit, because I don't think people understand what a fiat currency is. So fiat currency is not backed by anything. It's a promise. That's all it is. It's a promise
That,
made by the government that says, this is worth $1. It's worth $1. We promise to pay. That's it. And what happens in true economic collapses or crises is that is either inflated away, or you might wake up to find out, just like Germany did in the 1920s, that it's just gone. It takes a wheelbarrow to buy a loaf of bread. And those are real life examples. And we can go through many, many, many of real life examples. Zimbabwe has $1 trillion note. That's fiat currency. So if you want to be a trillionaire, move to Zimbabwe. You can accomplish that goal. So let's talk about, the little bit of the chaos and the fiat currency, so people understand the difference between a promise and gold, which is a hard asset.
mm-hmm. Well, when we look at, again, paper money, fiat currency, our dollars are just promissory notes. And are they safe dollars? Well, arguably they are. If you listen to the government, they are, but they're losing value. In other words, your buying power. That's what's ultimately happening. So when we look at, and we use gold, called real money, and silver to a different extent, except for, silver does have an industrial use. The so when we started buying precious metals years ago, for me, and in terms of investing in precious metals, we were buying bullion. So in other words, we looked at it and said, okay, I don't look at it as an investment. And honestly, I look at it more as I'm just exchanging fiat currency for real money. That's how I looked at it. I'm just not leaving it in the bank. What we have to consider, and there's so many issues around all of this, isn't there? Gosh, we could talk about this for hours about what's going on in the world. When we look at what's happening in terms of the banks, the fact is you deposit money in the bank, and that you no longer have access to that money. You may not be able to withdraw that money. You can actually go to a bank. I had this experience not that long ago where I literally went to the bank to withdraw $15,000. I wanted $15,000 cash. I was doing a deal. And first off, she said, well, what do you want the money for? This goes back to, why do I have to tell you this? But anyways, it didn't matter. I was buying an old car, and they wanted cash. Problem. She couldn't give me 15 grand. And I go, well, what am I supposed to do? And she goes, well, you can go to the ATM. And I go, well, I've got limits, of course, on what I can withdraw. She says, I can lift that limit. You go over to the ATM and you can probably withdraw that money. Literally, that's what I had to do. She could not reach into her drawer and give me $15,000. So this is something that we have to understand, is that when we look at how money is being handled, the shifts in our banking system, the digital ID, these are all things that are leading up to an end result where we're not going to have the cash that we had. We're depending on the bank to not shut down. We're depending on the bank to be able to access and do electronic transactions. So these are all things that are unfolding before us, and we have to say, okay, well, let's not even call that bad news, let's just not paint it with any kind of a conspiracy picture or anything like that. Let's just say, as responsible citizens to our families and our friends, what is our thesis of what we see and the risks that are there, and how do we risk mitigate? Well, one of the risk mitigations might be to own some precious metals. One of the risk mitigations might be, given the propensity and what we're seeing as cyber attacks, potential cyber attacks. Well, you have a cyber attack and you lose all access to the banking system. You better have some cash kicking around on the side, a little bit of money to get you through. So, how do you risk mitigate in an environment? That's the first part of it. How do we thrive in times of strife or this confusion that we're going through? First off is batten down the hatches a little bit, risk mitigate. Once you think you've got that handled and you're paying attention to that part of it, then you say, okay, well, within all of this madness, what are the opportunities? And right now, for example, when you think about real estate, Nadine, you play in that space, I play in that space, is it looks like there is, like, the whole real estate market is melting down. It's doom and gloom. And yet that's exactly where the opportunities live, because you have to look at, in a slump cycle like we are now, we all think it's going to last forever psychologically. That's the emotional part of it. In a boom cycle, we're all geniuses and we think it's going to last forever. We're both wrong. Slump cycles don't last forever. Boom cycles don't last forever, whether it be real estate or whatever it is. Our job as investors is to, number one, risk mitigate, but then to look at a slump cycle like we're in right now in the world of real estate, knowing that there are huge problems out there. Like, people are in trouble. And we can be, if we're educated and we're a little courageous and we're a little creative, we can be the problem solvers. And solving other people's problems are what creates the opportunities for us. And that just comes from having a fundamental thought process around quit buying into just the bad news headlines. There's lots of them. All of the kind of the proverbial shit hitting the fan. We got it. Okay, this is what's happening. What do we do with it? And we have to pull back and go, within the chaos is the opportunity. And whatever those opportunities look like, the first part of that is risk mitigation. When you have to be able to say to yourself, I don't like the direction this is going. And that could be what the banks are doing, what the Bank of Canada is doing, what the federal government's doing, what your provincial government is doing. I mean, look what's happening in British Columbia right now, given what EB's doing within that provincial government structure. I mean, it's freaking people out. Investments leaving Canada, it's leaving British Columbia, or money's not coming into British Columbia. These are all political kind of the weather, the political storms that are being created, or the economic storms that are being created by the politics. Here's the thing. EB won't be in there forever. He will go away.
Maybe, hopefully sooner than later.
Hopefully sooner than later. But here's the thing about it. Well, all of this uncertainty is happening and money is sitting on the sidelines. That's where the opportunity exists. If you can look into it, create a thesis going. So my thesis is around British Columbia right now. EB's going to be gone. He barely got in last time. And so from a political point of view and the power of politics, we have to look at it. He's going to be gone and things will start to shift around. So if you can buy into that thesis and the possibilities and the probabilities, then you can start to make decisions, because that's what it boils down to. Is if we're sitting in the world of being indecisive, nothing gets done. In the meantime, we're losing ground. So that's kind of how I look at it, Nadine. And, I use the phrase often, which is clarity equals velocity. What do you need to do to get clear so that you can make decisions that can move you forward, create momentum and velocity to move you forward?
And those are so many great points. So, I mean, for me, owning silver and gold has always been an insurance policy. I don't own it. I don't look at the price every day, from a perspective of, oh, did I make money? I don't care. This is something that hopefully I never ever use. I never ever have a need or a requirement for that I can hand off to my daughter, and because it was never required. It's insurance. You have insurance on your house, you have insurance in your car for those what if scenarios. Because even though they're unlikely, they are very probable. And when they happen, you're very happy to have it. So my clients always own silver and gold, always recommend. And I prefer silver a little bit more than gold because if you look at the ratio of gold to silver historically, and because it is a commodity, it is something that is used and consumed. I think it is so undervalued in the market in comparison to gold right now. And eventually that will catch up according to at least historical trends. So the other one that we had talked about was real estate. I like buying things on sale. It's amazing. Everybody knows the saying, you buy low, sell high, but yet they always do the exact opposite. So I bought 400 acres of land, as you know, in BC, and I bought it for 40 cents on the dollar 10 years ago. And we put, a little more money into it, and now it's worth, my goodness, 10 times what we paid for it. And, people are always like, well, I'm afraid it's not the right time. Real estate's not a good space. It's like, well, bonds. You buy a discount on a bond. A bond is worth $1. If I bought it for 50 cents on the dollar, I know I'm going to get my dollar back. And not only that, but hey, I'm getting yield on it, or I'm getting, a forced appreciation, because there's a difference between natural appreciation and forced appreciation. And you can force in real estate appreciation by doing zoning improvements, the studies, getting it ready for development, and then going vertical on it, building it, then putting businesses into it. There's all sorts of ways and opportunities to do that. And that's some of the things that REIN does teach. And for so many people, they think even once they know, how and they know what, they don't often have a community to kind of help them along the way, because everybody feels alone, right? We all do. It's like, I'm the only one who thinks this way. And that's not always the case. But it is nice to have a community to kind of help you support, come together once in a while to kind of get you towards. If you have a question, you have someone to ask, for example. So things like that are what I'm trying to do now, because I do see some major headwinds coming, is build communities for people of like-minded individuals where they can go and they can say, what do I do here? What are your thoughts on this? But you know what? It has to be your strategy as well. It's no good for somebody to implement my strategy. No good for somebody to implement your strategy. You have to understand your strategy. So sometimes having that coach or having that, second opinion, I love that, because I call myself a sober second opinion for most of my clients.
That's great, and I think you make some. Community is so important, and there's a fundamental around success, which is we need to, if necessary, go out of our way to create the environment for ourselves to succeed, to surround yourself with like-minded individuals, so that when you're going through the emotional highs and lows and questioning, you can have a conversation. I mean, ideas are interesting when you're in the right environment, in the right community. Now, ideas are a dime a dozen, so we get all that. I don't need. Sometimes we don't need more ideas. We need different perspectives. And when we start having conversations and throwing ideas on the table, we come to a conclusion. We can often come to a conclusion because we're getting different perspectives. And perspective shifts reality. Our perspective, but even with our listeners today, if we can help you shift your perspective of what's going on, then there's headway for you. If our perception is based on our perspective, it's up to us to say, am I really looking at this the way I need to look at it? Is there a different perspective? And my goal here today was to share with your audience is maybe a shift of perspective, a different way to look at things. So real estate, within the real estate investment network, we say it all the time. There is no bad time to invest in real estate. There's just the wrong strategy given what's going on economically. And there are times where buy and hold makes sense, and other times when fix and flip makes sense, or maybe it's a rent to own strategy. Right now, for example, agreements for sale or even vendor financing is kind of a great strategy, depending on where you're at. The point of it is that we have to be able to put ourselves in an environment, surround ourselves with a community where we're getting different perspectives so that we can shift the perception that we may have. And that perception, by the way, could be really doom and gloom, or it could be, oh, I'm really bullish. And you may be too extreme one side or the other. And so when we can shift our perception because we have a different perspective, that changes the game. And so today, what I would encourage, if I can help you shift your perspective, don't look at the headlines of and what's going on today. If we're going to be savvy, if we're going to be sophisticated in our thinking, we can't look at what is today. We have to look into the future. We just have to. And we can use the economic fundamentals to do that. We can look at historical trends. We can look at different ways to say, oh, here's where I see this going in 5 years. You looked at your project many years ago, 10 years ago, and you saw a future and you have a vision for what that is. You've then leaned into it and are bringing that to fruition. That's because you had a perspective that said, hey, this is a good deal. I'm going to take advantage of it, and I'm going to pull the trigger on this particular deal. So that's part of what we have to help people understand is how can we look at the world through a lens that isn't emotional. And it's hard because, listen, I can watch our politics and get really pissed off. I can get really fired up about it, knowing that me being pissed off is kind of, or being angry is like, drinking poison and expecting the other person to die. There's that phrase, right? So what can we control? And I can't control the government. So I can go around being pissed off. That's on me. Messes up my physiology. So quit doing it. Just go, okay, that's what he's doing. That's where he's going. That's what I believe. This is the approach I'm going to take.
Well, so many people ask me every day, because I've been so politically involved, like, how do you wear a smile on your face every day? And it's like, because, you can only control what you can control, influence what you can, and let the rest go, and it is mindset. So on the back of my business card, I laugh because when you talk about perspective, it actually says, and it's right here, I'll read it for you word for word, change the way you look at things and the things you look at change. It is mindset. It is perspective. And I'm guilty of this too. There's often times that I get, oh, what am I doing? Why am I doing this? And you feel absolutely isolated and alone. And I know for me, I have always felt, forgive me because I'm dragging you into this. We do not think like most people.
No.
That's just reality, right? There's, a small group of people who are willing to embrace the chaos, embrace the change, and who take the time to map out a thesis as to where things are going, because we understand a little bit of history and we also understand where things are at. But we also know, that all of that will shift, all of that will change. So for me, it's about positioning today for the year down the road, the 2 years down the road, the 3 years down the road. For heaven's sakes, was it Tony Robbins right now is waving the red flags of, investing. So it's like, things are not as rosy when Mr., get everybody excited is saying, okay, you do have to have a strategy. And I think that's where community for me is so incredibly important right now, because it just helps keep you grounded, I think, and helps keep you in that second sober thought scenario where there are other people around you who go, yeah, the media sells fear, right? That's what they do. That's what the headlines are all about. It's about grabbing your attention. It's doom and gloom because that's what sells. But in that, there's always opportunity. So we talked about something, and you said we could go on for hours. We could go on for days, I'm sure.
That's true.
About this
I think
stuff.
Oh, sorry, I don't want to interrupt you, but there is a point I want to just bring back to, but go ahead.
Yeah, and that's what I was just going to ask you. Are there any other final points that you wanted to really highlight for people and, share your wisdom and your knowledge?
Here's a fundamental around it all, Nadine. And so for over 40 years, I've been a small business owner. I've been in business, for many years. I've stood on stage with investors teaching people how to invest in real estate. I don't sell real estate, just for I have no skin in the game. If you buy real estate or don't, doesn't affect my net worth one little bit. The point of it is that when I look at the tens of thousands of investors that I've worked either directly with or one-on-one, one on many, on the stage, off the stage, all the things that we've done over the years, we see, and there's fundamentally, we asked ourselves the question, why is it that some people are just like hitting it out of the park? They're growing profitable portfolios, they're growing their net worth, they're seeing their financial future start to evolve. And then there's others who aren't doing that. And so I want to go back to the fundamental point that you made. This is a game of mindset. This is really the tenacity, if you will, of looking at what's going on in the world and then taking control of ourselves. In other words, it is the ongoing game of self-mastery. I don't like the term mindset so much anymore because I think it's overused and people kind of get turned off with that term now is mindset. Oh, you guys, especially if you're an engineer brain, it's like, okay, let's just connect the dots. Okay. My point of it is that to go through what we're going through and what we have been going through, to notice the diversity, the polarization, the politics, the headlines, you have to have the wherewithal to look and say, who am I being in the context of what's happening in the world today? I coined the phrase mind shui, and it's actually a self-mastery program that Stephanie and I coach around mind shui, which for us was the reason I came up with that word was it's feng shui for the mind. We're all familiar with feng shui of our home. Nadine, I'm sure you're feng shuied your home to some level, and it really is about clearing the clutter. And so when I say mind shui, it is about feng shui for the mind. It's clearing the clutter of the mind so that we can make decisions, so we can see a path forward, so we can handle what's happening to us emotionally, spiritually, physically even, mentally for sure. And so that becomes a part of our own process. And as much as we say, well, how do we get through the chaos financially? How do we prosper in times of chaos? As much as there's a doingness, well, what's the strategy? Tell me the strategy. Tell me what to do, how to do it. Where should I invest? That's all. That part of it's really not the most difficult part. The most difficult part is actually pulling the trigger, the taking action, the actual, okay, I got a thesis. I'm going to risk mitigate. I'm going to take advantage of opportunities that are out there. So then you have to put that plan in place, and then you have to have the mental wherewithal to actually, and the courage to take action, to put that plan and put it and start and executing on the plan, if you will. And that is a mental construct.
It's really interesting. In my presentations, I often do I call it the trick question. How many of you agree that knowledge is power? And of course, the majority of the room puts up their hands, right? Because that's what we've been taught. But here's the reality. The definition of power is a force applied over time. And without the application, without the action, like you said, pull the trigger, nothing changes. And that's uncomfortable for people because what got you there is not going to get you, or what got you here is not going to get you there. So, to do something different is a requirement. If you're leveling up, what I would call, or stepping up into another level of your wealth or your mental preparedness or your relationship, it doesn't really matter. It requires taking different actions. And so I think that's a really great place to kind of end things. I'd love to think that my house was feng shuied. I have 3 dogs, a cat, a child, a husband. Chaos is my world. Maybe that's why I've done what I've done.
But some people really some people are just wired for chaos. They thrive in it. As a matter of fact, it doesn't seem all that chaotic to them. They're just doing their thing. It's like, wax on, wax off, just moving around and getting things done. To your action, there's a really great quote that I'll share with you, which is, if more knowledge was the answer, we'd all be billionaires with 6-packs. So there's some food for thought. It is about the action you take.
Absolutely. Now, Patrick, if somebody wanted to find you, reach out to you, they wanted to, your mindset, a podcast, or, become a member of REIN, where would they do that?
I can do a couple things. The podcast is The Everyday Millionaire, or You can go to my website, TEDM, TEDM, which is the acronym for the Everyday Millionaire, tedm.ca. And REIN Canada is the Real Estate Investment Network, and we do monthly meetings, and I do economic updates every month. And so there's a possibility, if you're interested in finding out more about what's going on economically, I do those updates every month, mostly related to real estate. However, I've had many guests that are not real estate related, which is just talking about what's going on in the economy and what we should do.
There you go. So there you have it, everybody. You have, don't say that I don't share my network of friends with you and expertise. And thank you so much, Patrick. I think this was a really great start and an introduction to my audience in particular about some of the topics and things that are top of mind, not necessarily directly politically related, but there's a connection there. And I think we need to do more of these.
Oh, we should get on and go. We could go on forever. So, but it isn't. This is so political. I mean, and I just want to stress what's going on right now at a global macro level. It's all political, and we have to watch what's happening. And for those who are paying attention, they're seeing something unfolding. Some are further along that journey of understanding what's happening in the world. What we can be pretty confident in saying is status quo is not going to create the future you want for yourself. You must shift what you're doing and taking action. If you're feeling stuck, if you're feeling like you're running behind the slow leak, whatever you want to look at, the status quo is not okay. You have to make some decisions, and you need to be able to take action, put yourself in the right environment, have the right conversations.
That's a perfect way to end it, because that is so true. What got you here is not going to get you there. And, I think, I just on the economy side, wartime economies, for example, which we're seeing more and more of a likelihood of moving into that area, is a very different economy than the one that we've just left. So with that in mind, I'm going to say goodbye to our listeners. And, if you happen to like this video, if you want to see more of Patrick, who I've got him on the full screen here, please send me a comment. If you have a question for Patrick or a question for myself, please do let us know. You have to like, you have to share, you have to subscribe. Don't miss out on any more of this type of valuable information. And I think this is something that we will do more of in the future. So many people do ask me, what do you do? Well, what I do is not necessarily what you do, but I do coach some individuals, just like Patrick coaches individuals and offers, community, which is huge. And I'm beginning to shift some of my focus more on community. You have to find the community of which you belong to, of that like-minded individuals, the ones that are going to keep you kind of sane and sober as you move forward into some of the, I think, upcoming events. There's no need to panic. There's a need to be prepared. So with that in mind, everybody, like, subscribe, do share, and God bless you all.